as we know, market structure itself, we have our normal uptrend, which has key points, higher highs, and higher lows. Okay? And we have our overall downtrend, which has lower highs and lower lows. Okay? Highs and higher lows. Okay, so a few things that you got to keep in mind when structure is actually done, which is the break of structure, which is when the market actually breaks a higher low point right here, which looks like this. When the market breaks a level of support, it creates two bearish candles, which pretty much closes over that level of support, which is based off this time frame, which means that if this is based off of H1, then structure has to be doing this to actually break that point on H1. Okay, if I see this kind of move around M30 chart, that's invalid. Okay, so we want to keep everything that we actually do on one time frame on that time frame itself. If I do my structure based off of H4, it has to break structure on H4, which has to do the same exact thing. Okay, and this video right here is definitely after Fibonacci for a reason itself, because Fibonacci does play a major part in structure itself. Some other variations that can actually happen in structure also that people fail to realize, that the market doesn't always have to create higher highs and higher lows, right? This right here is the the original, the general uptrend, but then you could have variations. You could have lower highs but still maintain the uptrend. Main reason is because the market itself is still creating higher low points all right here, all higher low points. So overall the uptrend was still being maintained because this was not being broken. Okay, up until the market itself, it breaks a level of support, which is a higher low point. So as long as the higher low point is not being broken, then it's still going to be maintained as an overall uptrend. There's times when you could see, for example, this right here is a descending triangle in an overall uptrend. Do you know why? The market itself it made a higher high here, higher low here, lower high, lower high, lower high, lower high, but on the bottom side it maintained the higher low point that was overall made right here. All these other points was just high. I mean, all these other points were just lows, actually. Lows, lows, lows. Lower highs up top, but that doesn't matter as long as the support level was still being respected. Same concept that goes in on a downtrend. On a downtrend, yes, you can do this, which is a descending triangle, which maintains one level of support the entire time, and on the upside, it was kept on getting lower highs, which it keeps on making the price less and less and less and less compared to the price scale that's all over here. Okay, so price is still getting stronger, and it's still maintaining the trend that's currently in. And then it gives you another opportunity also to draw a trend line, which can kind of guide you to where the market can possibly find a level of resistance on the actual trend that you're currently on. So trend line itself, it definitely helps out. It gives you this kind of like a path, and that path can create confluence out of market also, which can give you like a stronger confirmation of a certain type of setup or a certain type of trend, and you can definitely take positions off of these points right here. So just like how I drew the setup earlier, the market can actually do this. In this example, the market itself was making lower highs, lower lows, lower lows, lower highs. But it made that, and then it made a level of resistance. Okay? When the market actually retested these areas, it made highs, 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 highs. Even though on the downside, yes, it made a lower low here, and then it made higher lows. But the downtrend was still being respected because no lower high was broken, which when a lower high is broken on a downtrend, structure is broken. When a market is when a market breaks a higher low on an uptrend, structure is broken. So this right here is the overall transitions phases. This right here is a uptrend to downtrend, and a downtrend to uptrend. Okay, so we have our uptrend right here, break a structure, downtrend. Broken structure was right here when the market broke a higher low point, and on this example, this right here was a downtrend which broke a higher low right there. Circle this. That had to be broken. So market overall transition from an uptrend to a downtrend here, and a downtrend to an uptrend here, up on the break structure on the actual chart itself. So first selling opportunity after all this right here, after the actual break structure, is the first lower high point, which is right here. First lower high point after the break structure. After. Okay? The first buying opportunity after the break structure on the downtrend is the first higher low point after the break structure. Alright? So remember to keep in mind, just keep things on the same time frame that you're actually analyzing on. That's the only way that it can actually be valid. So yeah, it's definitely a lot of things that you can take in consideration when you're actually applying structure itself. This video, also like I mentioned before, is after Fibonacci for a reason, because when we're actually measuring our retracements, the market itself can retrace what I said. The market can retrace here, it can retrace here, retrace here, retrace here, and it can retrace here. This point right here is the max that it can retrace, because what this right here is considered as a higher low point. Okay, once market breaks that, which is also 100% on your Fibonacci, this right here is 0%. Once the market breaks that, then structure is broken entirely, which is then when structure is broken, same concept as we drew before. When structure is broken, you're looking for selling opportunity up until the market actually has to make a lower low, and then makes the first lower high. Alright? So yeah, you're literally using fibs on every single portion of this entire thing. So fibs can be used, fibs can be used, fibs can be used on every single retracement, also to actually measure how steep that retrace can go, because it has all this room to breathe.